Ian, how to take advantage of drops with futures market.
I'm gonna just give you all the targets real quick. Dow, you should short if the market falls, and only do this maybe 3 times a year. 523 points. NASDAQ, I want you to go for 700 points. The stop loss should be 100 ticks to 100 points. You're risking 1 to make 7. Those two will move faster. You don't really need to think about the ES, but here's the thing that is great about the market. Too many people are so focused on puts. You shouldn't have any long-term positions to the downside because 95% of the moves are going to be up over a 5-year period. So you're trading in the wrong direction. But if we have a violent drop like we did today, you can clean up in an hour to offset any losses. Kudos to the snipers that hit. I mean, there's some snipers today that hit 20 and 30 grand. But the thing that I want to stress at InvestFest, I only want you to take 10 trades a year. 10. Learn how to trade with size. Know how to get the direction right 100% of the time. And then the way I'm able to stay into the market when we have hard drops like this, if I'm able to short the market, I never look at my long-term account to see what Apple, Microsoft, VOO, VUG, VTI, these are scholarships, so write these down, AMD, are doing. So if I'm able to make money when and I'm gonna be real, man, I love when the market drops like this. It shakes all these scary ass investors out who haven't studied, because if the market is bloody and you're afraid, it means you haven't put enough time in. I don't want you to buy at a high. I want you to buy when things are at a low. We are at a proverbial low. And in 3 months, you will forget this even happened. Now, if you want to know a day that is identical to today, go to August 24th and August 21st. So August 21st and 24th of 2015. See how that move played out. We are at some point going to get a dead cat bounce off the weekly chart, and we're going to bounce off of it and come back down. Mark off your areas in advance. A lot of people are panicking because what happens in September, you should be marking off the places you want to get in for October. And in August, you need to be preparing where you want to get in for September. Always playing your entries a month in advance. But if you want to see a day that mirrors today, pull up the data on Thinkorswim from August 20, or you can do it on TradingView. August 24, 2015. It'll tell you exactly what could happen over these next couple of weeks.
Let me ask you this. Being that we know that this time of the year, the stock market usually always goes down.
Mm-hmm.
Your reference for next year. Is this something that people can play an inverted index play for?
I wouldn't do it. I'm going to be real, because most people don't have the discipline. I know I've told you guys about UVXY before, but if you don't listen, like, you shouldn't hold an inverted index longer than 2 days, because you're betting against the market. The market is going to be up majority of the time. And what's going to happen? Man, Rashad, got to holler at you, bro. You call Ian a goat, and I'm getting slaughtered. How you the goat?
Lost some bread, yo.
Bro, I lost 1,500. I'm like, I didn't tell you to hold it for that long. 2 index, 2 tech, no stress. Listen to me. If someone else made you more money than listening to me, please log out of Market Mondays. Watch how these numbers don't change. I'm begging y'all, please stop making this so complicated. Like, if I'm giving you the Phil Jackson triangle and we got Michael and Kobe, we're good. So what? Bill Winnington missed 1 shot. We got it on the next rebound, baby. Like, it's not that complicated. The part that makes it tough is people alter a recipe. Like, imagine if you went to Coca-Cola, I was in Atlanta, like, and you finally went in and got the formula from the vault, and you like, I'm gonna add some pepper and chives to this because my grandmama loved pepper. That's not the Coca-Cola formula. Just stick with it. If you're gonna do an inverted index and you're gonna trade it, great, hold it for 2 days max. But anything more than that, you're gonna tear your account up.
And the inverted index is betting what the stock market is going to go down.
Yes.
The index that goes up when the stock market goes down.
Right. So like a day like today, if you had a Dow, I think at its peak intraday was down 970 points.
Mm-hmm.
Like if you had an inverted index, then you would have made money because obviously it dropped 970 points. But like I said, it closed at 660.
Down 660.
Down 660. So that's it. And that's another thing is that we always preach about not falling asleep at the wheel. And so I always stress to people some of those indicators, right? Like we watch the VIX. And so if we've been watching the VIX, we've been slowly seeing that VIX creep up out of the teens, up into the 20s. Today, I think it's up 26. And so we keep an eye on that because we know that that means it's the volatility.
It's very important for people. A lot of people just tune in for the first time. So what is the VIX?
So it's the volatility index. And so it tells you how the market is moving. If the number gets higher,
the market is reacting. Yeah.
Right, how the market is reacting. So if you see those numbers creeping higher, usually in that range of 10 to 20, well, 10 to 15, I don't even want to say 20 because it's up there now. It means that there's pretty like some steady movement inside the market. We saw it creeping up inside the 20s. I know last September we hit 42. Last October it hit 47.
Last March it hit 80.85 on the VIX future year.
0.85, right? On the 13th, all right, when the world closed, it was like, all right, well, there's going to be some extreme volatility. We saw it shoot up. Another thing that we always talk about is the fear and greed index, and I know that's something Ian, you brought up. So it's hit 21 right now, right? And we know when we see fear, we feast, right? We don't panic. We're finding our positions. We waited for these moments. That's why I said investing takes extreme discipline. And so, yeah, you might have to wait 5 weeks. You might have to wait 6 months.
What is the fear and greed index?
It measures the ratio of which people are fearful about the market versus super optimistic.
Yeah,
right.
But it's very important because we can't take it for granted.
We can't look over it.
Somebody's hearing this for the first time.
We can't take it for granted that somebody just automatically knows.
Yeah, no, somebody's hearing it for the first time. And so that index goes from 0 to 100, right? And so the further you go to 100, that's extreme greed, right? If there's extreme greed, usually there's going to be a pullback because people are oversaturating the market, they're overbuying. When we see extreme fear, that obviously the number gets lower.
If it gets to 0, please buy. Shout out to everybody who bought those 1 and 2.
I was gonna say if we go under 20, this might be a point, like that might be the trigger point. I think we might have mentioned that. Like I think
8.5 is a great play. Like, but if it ever gets like, put all the money you can in. If it goes to 0,
that means it's extreme fear, and this is why it's so important to be ready. Like we always, right?
And for context, the VIX. My bad, Troy. Go ahead. My bad.
No, go ahead. I was just gonna say it's the same thing in life. Like we don't have to get ready; we stay ready.
Yeah, the last time the VIX was this high, like was at a frothy moment like this was January. It was at 35. It went on a 6-month run of being down. I'm going to tell you, like, okay, so the crystal ball is shining bright. We'll probably get back to 19 within 3 weeks. It's nothing to worry about. If you are afraid of Apple, Microsoft, AMD, NVIDIA, Costco, Home Depot, write these down because you want a scholarship. VTI, VOO, VUG. Please sell them to me. Please DM me at the Master Investor. Sell them to me. You're going to be upset in a year. I'll take all the shares off you. Smalls, call me next time too.
There you have it. There you have it, ladies and gentlemen.